Hey, it's Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Today was, what was the day? Today was Tuesday, October 9th, 10/9/2018. Let's take a look. Let's recap. Let's recap today. Let's look at the 8 o'clock open and determine how, as a recap, let's look at the overall day. Now, coming into the day, this is 8. Let me just put a vertical line at 8 o'clock so we can pay attention to that in a minute. All right, so there's 8 o'clock. This was my opening trade, by the way. It ended up being basically a break-even trade. Went down 1p. All right, so why did I take this short? Let's take a look at why the reasoning behind the short was. In fact, I probably should have taken the short around this area. Looking at it, I should have taken it and hopefully I'll continue to get better at this. So this would have been a better place to short the market today, right around here instead of at 70. What did I get in at 77? The better area would have been at 74, and this would have been a break-even trade. But why did I short? Why did I go short to start the day? That's the biggest question. So what you're going to have to do is go back and look and find highest volume bar. This is highest volume bar in the session right here. It's 1334 coming at 4:10 a.m. and I want you to pay attention to what, let's see if I can get this in. Yeah, good. We can see the 8 o'clock mark. Hopefully you can answer this question before I even show you on the screen draw tool what I like about it. What was the trade setup that we got involved in at the open? And if your answer was lower highs, you're correct. So what we have is a high volume blue bar that we haven't pierced on our movement up to this point in time when the 8 o'clock, and this is the 8 o'clock line right here, comes into the market. So I was willing to risk the high at this point against this lower high pattern that would come across at 8 based upon this volume figure over here, thinking that we could drive even further down. Now this one doesn't drive all the way down, but I'll show you the next trade sequence, which I got stopped out of before it moved, but this sequence gets stopped out. You can actually see my exit point right in here. So this is let me get the line on it. I'm feeling pretty good about what I'm doing now. Not just a matter of if you looked at yesterday's video, and you look at the comments, you can see I have a couple trolls in the neighborhood. Believe it or not everybody likes me in my neighborhood. I wonder why. Because I'm a little outspoken. I'm quiet, but I don't really talk much, and when I do talk, it's usually on something that I know. And maybe that offends people, because I'm pretty much quiet unless it's a subject that I am confident that I have something valuable to share. For instance, football, trading, so forth, so on. Religion, maybe. No, I wouldn't even say religion. Certainly not politics. Anyway, so this was a setup coming in here, and then you see that we kind of meandered our way around, and then we made this move down here. Now, the market reaches down to 74.09, and it goes down to, as you can see right here, this horizontal line across the charts, and the horizontal line right here. The difference between these two is 10 ticks. Now, what is the significance of what I drew on the chart right here? Why did I have a 10 tick stop between one to the next? And if your answer was 3p was hit, and then I was justifying being 10 ticks behind it, then give yourself a gold star. So today 3p movement was 75 ticks. So being 3 behind it is 65, and if I was risking at most today 14 ticks, well, then all of a sudden you can figure out the win to loss ratio. I will leave that for you to figure out. But let's talk about the trade setup over here and why I liked it. Now this ends up being highest volume on the red side, and we'll talk about that in a minute. This ends up being the turnaround point in the market until another point comes in, and we'll talk about that as well. So this is the 805. Now, what do you see in this movement that could possibly answer the question of what I was looking at? Now, first, what we need to do is go back to this 4 o'clock bar and mark the trend lines on here. So when I was setting up my morning, got up at about 7 my time. Whoops. Don't want the screen draw. What I want is to mark the trend as I saw it. And we're going to hit the top of this, which is right in this area right here. So this is how I set up this particular trade. So short below, buy above, and then this is the area that we can trade into depending upon what the market is showing in front of us. So we see this is the first time it moves above. It barely peaks above here, and then if we look back at the 8 o'clock mark, it doesn't peak at all above. This is why I said this would have been the better place to get in. I had my line a little bit higher in the session. That's why I got in here. But this would have been a better mark, and if I would, what I can improve upon is where I put this line at, right? Where does the market make its initial move from? I put it up here, and so if I would show you where I originally had it, which was incorrect on my way of looking at it, so I used this right there, and I should have went down here a little bit lower. So what I saw was I wanted to be in below this line, and so I got like a 1 tick slippage to get in below this line right at 8 o'clock, but I should have waited for right in here at 8:04 to get short on this first trade. All right, that's a mistake that probably cost me a bigger winning day today, but it is something that I can improve upon. Now let's get back to this over here. So when we reach down to this mark right here, 7444, we have our first blue bar volume right here that's above 1,000. It's 1,063, I believe. Comes in at 8:05. Now, is this 1,063 greater than the 4 o'clock bar that comes in? No. Therefore, we're still looking short at this point in time. I'm not looking to go long on this move. I'm looking to go short. In fact, I was short already in this trade, and I got stopped out on the trade up here. Now, what I drew on the charts at the time of trade is I would where this mark was the 1P mark. I went down to here and I looked at this right here, and this is where I usually put my line at. Usually put my line roughly where the third wave is moving. So 1, 2, and then around the third wave I'm putting in my GAN, fourth time signal. Sometimes I put it in on wave when the second wave's coming through, and I look at where this is bottoming, but more times than not I'm looking to see where wave 3 is started and finishing up, so that I can be ready for wave 4 and get involved in the trade. So where do you think, looking at this chart setup, I think you know where the value is right now, correct? Actually, we need to get rid of this line now. We see where the value is, right? We got our Gann signal coming across the charts, and we see where value is at this point. It's right here. Now, this is things that I've been working on in my past and now into my future. There's a signal here around 74.74 again, or you could have waited for it around here and then got involved in it and still been able to hold on to the trade as it moved down. So there were two entry points that you could have thought about and considered. Which of the two is better? Well, that's to the eye of the beholder. I like to be closer to the break line and then use this. So if it would go above this here or above this level here, so my risk would have been 13, 14 ticks past the 74, so it didn't go, but that would have been my risk right up here across this line. This is where I would have found value. 74, actually this is where I found value. It's 74.74. Now you plug in 74.74, you find out a 3p move is 73.99. Did we reach 73.99? No, we didn't. We went down to 7,400. So we're right on top of it. And I had moved up to 74.02 because I was up 3 ticks off of, and that's pretty typical for me when a target is at 73.99 or it has to come down to below the next dollar figure. I usually run 2 to 3 ticks above it. So even if I was at 74.03, that would have been 74.13 on this side up here. So the 3p move does happen off the Gann fourth time through. And why is this Gann fourth time through valid? Because we continued to contain the movement of the lower high pattern. If you go back here and look, you'll see that the lower high pattern is contained inside here. Now you can actually bust one of the containment factors on the Gann signal. Maybe it comes up here and equals one of the lower highs as long as it doesn't bust the biggest lower high on the movement up. You can still look at this and then take it down. It just becomes, you know, but the best trades come on this level where you get the containment carrying the move, and then it takes off and moves down 3p. And like I said, a 3p move roughly, I didn't quite get everything, but this would have been a 75 tick move if you would have got the whole thing today, the whole enchilada. But it is something that, you know, that I saw. I hopefully you hopefully saw it too, and take advantage of these kind of situations that come across the market. I wish that I was as good as my mental capacity would allow me sometimes. But it's noticing trades too that even if they fall into what I would call the woulda, shoulda, coulda category, to know that you see them correctly, and then it's something that you can come back and say, all right, this can be added into what's called the trader toolbox, right? You can add this into your trader toolbox. Kind of, how does Gann work? You know, how do you want to make it work in your trading? Now, one of the books that I'm reading on the side right now, well, is reading more about Elliott Wave, and reading a book that was written in 1978 originally, and then updated as times moved on. And you can look at wave patterns as well. And I don't want to get into the technicals of all that, but you know, what this could have been, you know, basically what I'm going to get at is this would have been the end of the fifth part of the wave down here, um, if you were perfect in reading everything. And you don't know this until after the fact, though. At least that's how I get the wave patterns. Where you're paid, though, is to catch this stuff up here. To be able to read the market correctly and then get paid for your trading knowledge. Now today was a technically driven day based upon really nothing coming in to the market, and if you were to trade it correctly, I believe that would have been the way to handle today. Now here is your high volume red bar. The market kind of stair steps its way down, right? We talked about bottoms before. If you understand that this is a typical bottom based upon this kind of volume, this ends up becoming highest volume bar. And until you have a volume bar that's greater than this bar, it can become the bottom. Now you do have times where this just becomes a failure bar, which you could look at it, okay, it's a failure bar. To me, this is not a failure bar, because a failure bar would go deeper. And you would get another high red bar volume that would offset this one, and then it becomes what's called, I call a failure bar. This right here is just stair stepping its way down, and it's forming a bottom, right? You can see the rounded bottom being formed when you look at it from a bird's eye view, looking at it, the market right here. So you can see the cup that comes into the market, and then you see the blow off of that. Now I don't get involved in the longs right now, but I did see this long setup, and I knew that this is the exit point I wanted based upon this bar back here. It went to 3p, and then to be able to get it. So my goal was to get at least 2p on the trade over here, but if I could get closer to 3p, I wanted. So I had my stop trailing behind up here. Once it reached 3, then I came down into this over here. This is what it is. So, and I would have been quite happy to get knocked out at 2p today, by the way, on the trade. But I kept it up here, trailing behind it on that 200 bar SMA. That's why it's there, by the way. When I'm in a trade and I don't know where else to go, this is my line that I don't want to see broken, and then take advantage of the trade. Now, I talked about a setup that happened later on, and let's take a look at that, and then we'll wrap up today's recap. Did you see it? Here's highest volume over here. This volume bar is 1690. See this bar right here? 2161. All of a sudden, what happens? This becomes highest blue bar volume up here. Setup is right in this area to take it short. Now, it didn't really pan out a lot, but there was a setup to take it short through here, and then you see this one. Now, this is an unusual setup. When you see a high red bar volume and an up move, it usually is a significant point in the charts. So here's, it comes on a high. So this is almost like a mistake as I look at it now. I know there's really, I mean, so it's almost like a mistake. This is a bar that should be blue, but it's red. I treat this as a BBV, HVB, especially if it becomes highest volume. If it comes on the highs and it turns the other color, goes red instead of blue. More times than not, this was going to be a blue bar. So this is the high. And you can see it stair stepping just like on the short. I mean, on the long side of the trade, when the market was was it's just barely going above the high here, right? So it's staying here and it's just stair stepping its way up. This is a significant point to go and short, and you can see there's my short call right there to take it short and move it down. Now this trade really doesn't pan out. I think if you had more time in the trading session, a Top Step trader, it would have panned out better, but it was worth a 1p move down into close. So this ends up being 126, and I finished my day, most days, I would say 99% of my days, I don't like to trade past the 130 mark. So this is the close of the US market. So what's my day? I normally look between, and I've really struggled with this over the years. When do I start? When do I finish? Well, I start at the 8 a.m. mark on more times than not when there's not anything that I can talk about as far as what's going on back here. So this is my starting time right in here roughly. And then my finishing time on the US markets is over here at the 130 mark. So what's the time period? Now, as far as I'm concerned, I like to take off. I have my morning session, which usually lasts usually no later than 11. A lot of times I'm done a lot sooner than that. I could have waited around today and taken this trade on at the 10:15 mark, but I wasn't around at this point. I'd already made the money I wanted for the session, and I was saying, all right, I'm going to give up this the morning, but right now this could have been a good setup to get involved. The trade setup would have been too short. Actually, you can see a trade that I must have taken in here, and it just, I think it took me out at break even. Because I got in a little too quick. So here is a better, no, this is the one I did catch for the money. I'll take it back. 75.01. So I got in, I did catch this one. This is the one I did catch. And I was able to catch a little bit of money on this one. And you can see it kind of takes itself out over here. Not a really good driven day. The best trade, and if I would have caught all this move right over here, I would have been done on my trading session. If I would have caught this move, all of this move, which I didn't. But this is kind of me looking over the trade from the bird's eye view, and then, all right, this is what I see. Why didn't I take all of the profit that was on the table at this time? What part of my trading plan kept me away from taking all of the profit on this particular trade? It was the fear of the market going this way, that I didn't trust my GAN signal when it came across. So we talk about this, and I'm telling you, scared money is very difficult to trade when you're working on that fear basis, because trust becomes a very difficult thing to hold on to. Trusting in yourself. So it is what it is. You know, to know what you're, and I would argue to know how you're going to handle the day, and then being able to gain confidence in how you would handle the day is an important component of your overall trading strategy, because at some point the lessons that you learn you start applying. That's how I've learned how to be a better trader as an overall. That's how I learned about Gann. That's how I learned about Wyckoff. That's how I learned about Elliott. That's how I learned about all the traders that I have some kind of inclination to learn about, to be able to help me determine what can be perceived. In a nutshell, what I look for is what is perceived tops and what is a perceived bottom. And where are, in those areas, where are the turning points? Where can you perceive a turning point in the charts? So you see a turning point right in this area based upon that lower high pattern that had been formed. It's stuff that you just keep working on until it becomes, I guess, part of your trading toolbox. It becomes part of your arsenal that you use to help further your career. Anyway, so that's how I set up the day, and you can see that that's ends up being the bottom. This over here is 2161, and this is 2321 right here, which I would tell you should be a blue bar, and it shows up as red, so it's almost like a mistake on the charts here. This red should be blue. It's it works as, and it usually, these kind of bars, when I see them on the charts like this, they become high blue bar volume or high red bar volume coming in opposite of what a normal move looks like. Then that, I usually really like that trade setup to get involved in it. And this is where I did get involved on that particular trade, and worth 1p move down. So if the woulda, shoulda, coulda side of these trades, today, you have basically a 75 tick move. You have a 1p move that was at break even, and then you have into close, you have a 1p move. So today, basically, if I would have been perfect on my trading session, there were 100 ticks available in my trading strategy. So how do I catch that? How do I catch those ticks? How do I catch that? And it comes down to that word that I'm going to keep drumming into my psyche until it becomes second nature for me. Even if I am low on funds, stop stressing about the small stuff. Trust. I've got the experience. The experience is there now. I've paid the dues. The experience is there. Trust, and you see rust is in there too. So put the knock off the rust, trust in yourself, and quit worrying so much about all the small stuff, and allow yourself the ability to take some of these trades. And these are the kind of days that will build your account. It's these small days, and you're trading it correctly inside a trading day that can build your trading account up. All right, I'm going to leave it at that. It's Dave Knight here from 123daytrade.com. Thank you for watching. Thanks for being here. See you on the next video I put together. Bye for now.